Yeah, anyway, here we go. Good evening, everyone, and welcome to this session. I'm very sorry for all the stress we have been through through in the past days because of bad network, and I hope that's going to solve now because I've gotten a stronger network, and I believe we should be able to interact well with each other. But if should in case anytime you stop hearing me, let me know, please, so that I will know exactly what to do. All right, this is a slide you are supposed to do yesterday, and we're lagging behind. This class is going to end by 10:10. So, all right, let's start. Okay, we have done this part yesterday, and I've explained what spot trading is, and I explained that we have fundamental analysis and we have technical analysis, and I was explaining fundamental analysis that these are the things you have to do, you have to take factor into consideration, sorry, before you buy any asset, any cryptocurrency asset, or before you trade any cryptocurrency assets. Do you get? Now there's something I forgot to mention yesterday, and that is that there's difference between a coin, difference between a coin that you are planning to invest. There's difference between investing and just trading. They are not the same thing. They are different from each other. So here you are talking about trading, and you can also use this fundamental analysis for investment purposes. You can use these factors I'm explaining for both. Do you understand that now? So that's what I want to say. All right, now we spoke about market capitalization, and I believe everybody understood it. If you have issue with it, then you can visit the uh, the recorded video of yesterday's class. You will get it there. All right, let's proceed. Now, the next thing I was explaining yesterday before network cut me out was liquidity and trading volume. So I was trying to explain to you that before you trade any coin, you must you must ensure that it is very liquid. You must ensure that a lot of people are trading it. You don't want to trade a coin whereby there are no people interested in trading it. I hope that is clear enough. So that's what we mean by liquidity, and I gave examples yesterday of how a liquid coins look like, how a liquid coin look like. For example, yesterday I made example of Bitcoin, and I show you what Bitcoin looks like. For example, this is Bitcoin chart, and I told you that this part of the um, this place is the seller's book. So if you want to buy, this way you will come to these sellers. These are people willing to sell their coin, and you can see that there are a lot of people willing to sell. And if network is very nice, you will see it will keep moving. It will keep moving. Can you see? It keeps moving, keep moving. That means people are buying. These are orders people are filling, people are putting up. You understand? So this is amount of Bitcoin people want to sell, and this is the price they want to buy at sell at, and this is the total of the, like this multiply by this is the total here, as you can see it. So it keeps, you see it there, is very clear, very fast. Now if you go to a less, now these are people who want to buy. So if you want to sell your coin, this is where you pick orders from. Can you see everything keep moving? That means people are buying, people are selling it, so it's very liquid. So this is a good sign that this coin, it has enough liquidity. Do you understand? So if you pick a very a small coin, like a coin that is not, almost every coin on Binance will have liquidity. But let's see, you see like this one now, Quark slash Bitcoin, it may not be as fast Can you see? It's not as fast as Bitcoin. Maybe it's network, but it's not as fast as Bitcoin is. But it's moving very slowly. That means it's not very, very liquid. Enough, plenty people are not trading it. Can you see? So this one has less liquidity. So if you are trading this kind of a coin, you will know that you will not see high movement of price because it does not have liquidity. That's it. That's what I mean. All right. I hope that's clear enough. Then, trading volume. Now, I said it that trading volume is the total of buy and sell at the particular within the particular given time. That's amount of measure of people buying and selling, like as the asset is changing, and that is what gives us that's what gives us volume. And you can also see it here. You can also see it here. Uh, this 24 hours volume. Can you see for Bitcoin? That's about $26 billion. That means $26 billion worth of Bitcoin has been bought and sold within the last 24 hours. Do you see it? So this 24 hours volume for all the coins. Can you see? Now you see if you go to smaller coin, you will see very, very small 24 hours volume. Look at this one. Very, very small 24 hours volume. You don't want to trade. These ones are leverage tokens anyway. This one are leverage token. I'll explain leverage token later. But look at this, for example, see this one, 24 hours volume is just $7 million. That means in the past 24 hours, it's just $77 million of this coin has been sold and bought. This is a very, very low 24 hours volume. So you don't want to trade coins with low volume because it will not move very fast. That means people are not actually trading it. You don't want to trade a quiet market. Do you understand? You don't want to go into a silent market. Look at this one. This one is not even bringing any data. So you don't want to trade this kind of uh, coins. So you want to trade a coin that has good volume. Now, I think on the scale of average, try and trade a coin that has up to 200 billion, like or say 200 Bitcoin. I will explain all these things when we get to technical analysis. So let me waste time on there. So this is just to give you idea on what you are looking for. Yes. Then when we get to technical analysis, I'll give you well informed statistics. I don't have the data, the values with me. So that's it. There's a rule I personally use for this. I'll explain it later. Right. Let's just proceed. So the next thing you look at is the circulating supply. Is the circulating supply. There's this there's this law in economics that says the higher the supply of a good, the lower the price. Do you understand? Now, if you have a coin that has a very high supply, you don't actually want to trade a coin with a very high supply because if the supply is very, very high, then the change in price will be very, very low. It will not go up early. It will not go up quick because supply is too much. Now, let me introduce you to a website. There's a website. There's a website where you can always check uh, that you can also see the supply on Binance. You can see it on exchange, the total supply. Just click on details. Now this is it. Maximum supply of Bitcoin is 21 million. While circulating supply is 18 million. You understand? So this is averagely okay. There are coins that used to have 12 zeros. If you go to this website called coinmarketcap.com, that is a website where you can actually make your research about any coin. You can check metrics about any coin because it's not all coins that Binance has. Do you understand? So you can make your research, you can check details, you can check metric of any coin. So for example, let's say on this coin, we search for coins like uh let's say baby dodge. Let's say baby dodge. Now if you look at this the baby dodge, you see this is the total supply of it. How many zero is this? One, two, three, four, five. That's 15 zero. What's that? I think 60 is million, 90 is billion, 12 zero is trillion, 15 zero is quadrillion. So this coin are 420 quadrillion. This is massive. This is massive. This simply means that look at the price of this coin. Look at the price of this coin. It has is 0.0000000414217. Now for every zero to remove, for the 1 zero to reduce, this coin is having 1 2 3 4 5 6 7 8, right? Eight. That's 80 before digit number, right? Now before this decimal will move here and all this zero will reduce by 1 that means this market cap must have done multiply by 20. The market cap must have done multiply by 10, sorry, must have done 1000%. Look at the market cap. The market cap is around uh $1 billion. That's the market cap, $1 billion. Now before this will reduce by 1 zero will reduce, market cap must do multiply by 10. That means this will turn to 10 billion. Before another one will reduce, it will do multiply by 10 again, market cap. So this will become 100 billion. Before you do another, you remove another 1 zero, market cap is going to multiply by another 10. Now consider how many times will the market cap be multiplied by 10 before this coin will become $1. If you have any issues hearing me, please let me know. If you are not hearing me, let me know. Nobody has complained anyways. All right, I'm just asking so that I will not be talking to myself. But I just check now. Network is my signal strength is still very strong and I can hear myself clearly. So I don't know why this page is appeared. If you're hearing me, let me know also so that yeah, someone is saying I look stressed. Yeah, seriously, I've not been sleeping. But I'm not here to talk about my personal stuff, anyways. But let's just continue. All right. Where am I? This guy confused me. I know I look stressed. Seriously, I actually know it. All right. Now, what I'm explaining here is that before this coin will become $1, it must have done 1 2 3 4 5 6 a lot of percent, because before 1 0, before this decimal moves here, it must have done 1000%. Before it moves again, it must have done 1000%. Before it move again, it must have done 1000%. Before it move again, it must have done 1000%. So every move is 1000%. Now let's check. 1 2 3 4 5 6 7 8. That's it must have done like 88,000% before you can move to this point and become $0.4. That's $8,000. And the reason is because of this market cap. The market cap is too big. If the market cap is less, the movement will be easier because we are multiplying. I gave you the formula yesterday that the price of a coin is market cap multiplied by total circulating supply. I told you. Do you get? So it is going to be very difficult for this coin to enter $1. In fact, it will be very, very difficult for it to enter $0.5. In fact, to enter $0.1, it has to do a lot of percentage. You know how much will come inside like that? Just do $8,000 multiply by what is here. That is what the market cap will be. That's going to be a lot of money. A lot of money, a lot of money. In fact, it's going to enter trillions in market cap before this coin will enter 0.1 cent. The market cap will be entering trillion. Even Bitcoin, the number one cryptocurrency, is not even up to 1 trillion yet. So how can baby doge now enter 1 trillion? So you will see those marketers, those affiliates, and they will be telling you that see, look at this coin, is having plenty zeros, that if you just enter $1 you become a millionaire. It's not going to enter $1. That's the truth. It's not going to enter $1. If at all it's going to enter $1, maybe centuries to this time, not now. Because before this kind of coin will enter $1, Bitcoin must have entered maybe $10 trillion before this one will enter $1. Because if this coin should enter $1, that means the market cap will be over 1 trillion. So before this one enter $1 per token, Bitcoin must have gotten to not about ten trillion market cap. So the journey is still very far. I'm not condemning this kind of coin. I also uh, trade them, but the truth is, some of those companies, some of these exchange coins, they burn their coins. There's something they call burning in cryptocurrency. They can be burning this total supply, and it will be reducing, Do you understand? But if they don't do that, it will be very, very difficult for this coin. It will be very, very difficult for this coin to hit $1. That's my point. Sorry, I'm supposed to use circulating supply for the calculation, but even at that, the circulating supply is also plenty. This is 26, 1, 2, then 9 zeros. Still very long, still quadrillion. So when you see coins that has high supply, that's a red flag that you should be careful with it. It's a red flag that you should be careful with it. I'm not saying you should not invest in it. The way I invested in this kind of coin is something one of my ogas call asymmetric analysis. What it means by that is that you risk one. If you can hear me, let me know, please. If you can still hear me, please let me know. Okay. Just I don't understand your question. You say you don't understand. What exactly don't you understand about what I explained now? That's I'm referring to Matthew. Rephrase the question and let me know what you're exactly asking, because you said, what did I explain? I don't know what exactly you don't understand about it. Well, I'll just you say, what did I explain? I don't understand that. Anyway, just rephrase the question so that I can get it clearer. That's what I'm trying to say. So what I'm just saying essence here is that you must be careful with coins. You must be careful. Thank you for that. Yes, question should be at the end of the session. All right, I'll just continue. Jot down your questions. Don't post it now so that you not get me distracted. Just jot it down. Then at the end of the class, there will be like 5 minutes for questions and answers. So if you are see a coin with this kind of massive, massive, massive supply, you should be very careful with it. Now, I invested in Shiba. Let me give you an example of what I'm saying. I invested in Shiba Inu. Shiba Inu is very, very popular. Everybody knows about Shiba Inu. When I first heard about Shiba Inu, buy a So when I first heard about Shiba Inu, it was my friend that told me about it. Then it has a lot of zeros. I can't remember how many zeros. It will be up to 7 or 8 zeros I asked, or 9 zeros. Very plenty zeros. That's what I had that time. But it was only on decentralized exchange. That's Uniswap. And Uniswap is a very expensive decentralized exchange in due to the fact that the fee is very very high. It's on a Ethereum network. Exchanges on Ethereum network, they used to incur a lot of fees. You may want to buy a coin of $100 and fees will be $250. The fees are very crazy. So I told him I'm not buying. I told him I'm not buying back then. Then when they now did their IDO and is it IEO or something, and they now listed it on Hotbit. When they listed it on Hotbit, that's when I now bought it on Hotbit. Now I bought it because it's having mad supply. Total supply have even reduced. I think they bumped it or something. Then it was more than this. So the reason why I didn't buy much was that, okay, I knew that this thing, the supply is very very high. So for it to go up, a lot of money must enter into it. That is why I did not invest so much. So I invest just around, is it $50 or $90? I can't remember. That's why I invested in it. That money gave me up to $1,000. Just imagine, $50 gave me profit of almost $1,000. That is how you trade shitcoin. You trade with a little amount of money, expecting high returns, because they are coins with high risk, high reward. Now I can show you a lot of coins that I bought in my trust wallet with $50 that have gone to zero. More than 10 they are inside my trust wallet. I don't know their name offhand. So if I've put money I cannot afford to lose in those coins, I would have wrecked. Do you understand? Just imagine I'm buying each of those coins for $500 and more than 10 goes to zero. That means I've lost up to $5,000. That's a lot of money. But if I want to buy much coin like that, if I want to invest like $500 into a coin, I'm not going to buy a coin with high market supply. Do you understand? Maximum supply. So this supply is very important. When you see a coin with very high supply, let's check like AXS, like CXS now. Look at AXS is just 270 million maximum supply. That's why it was able to do that massive movement it did. Can you see it? Which other coin? See Cardano. See Cardano. See Cardano. Cardano is just 33 billion. See, but that's why I was able to do all those massive movements. So you should check maximum supply of the coin. If the maximum supply is too much, then it's a red flag that this might probably be like this could be spooky Shiba. Look at this spooky Shiba. I don't know what it is, but 1, 2, 3, 4, 5, 6. This is a lot of supply. It's too much. It's too much. So if I'm investing this kind of coin, I will invest with the mindset that the money I'm investing can go to zero. So I will not invest more than, let's say, $50, $20, $10, $5, depending on my pocket at that time. Do you understand? So that's what I'm trying to say. I hope that concept is clear now. So let's go back to our PDF. So you must check the circulating supply. The circulating supply of cryptocurrency refers to the total number of coins in active supplies that are accessible to the public, different from the total supply or maximum supply. Now, developer may increase the number of coins or tokens circulating. It's just what I've explained I say. It's what I've explained I say. So circulating supply is what I've been referring to. Sorry, is what I mean to be referring to, not total supply. Total supply is the coin in existence. Circulating supply is the one that people have bought, the one that is tradable, that is in circulation already, that is accessible to people. That's the difference. So it's circulating supply that I was referring to, not total supply. Now the next thing you look at is project metrics. You check the project metrics. Now project metrics takes a qualitative approach to evaluating the performance of a cryptocurrency. They focus on internal and external factors such as purpose of the cryptocurrency and how the cryptocurrency project operates. I think I mentioned briefly in one of our classes what internal and external factors means. Now, these are like use case of the coin. What is the purpose of it? What does it do? Do you understand? What is the nature and all of that? You must know all these things. And to know all these things is very easy. Just search the name of the coin on, you can use coin market cap, you can use coin gecko, you can use coin gecko. Can you see this is coin gecko? The same, they operate almost in the same way. There are a lot of them that you can use. You can also use nomics. I also use nomics. Yes, I can't start talking about these exchanges. They are very big or wide also. These platforms, it will take a whole session for me to explain how to use them. But you can also check information about the coin. Do you understand? So for example, let's say for coin market cap now. Coin market cap now. If you want to check what's this now? So let me say I want to research about I want to know about Cardano, for example. Cardano, for example. So this is it. I will, I will have access to their website. I can go to their website, look at their website here. I can check their community. You must check. Hey, this is another thing. I don't think I've add this one into the in the notes. This is another thing you must check. You must check their social media. You must check how many people is on their Telegram group, how many people is on their Medium page, Twitter handle, how many followers do they have, how are people interacting with it, how active is the coin. So you can go to their website from here. So when you go to their website, you see exactly what the coin does. This Cardano website. So you can read it. You read all this. Now these are information about the coin. Cardano is a proof of stake blockchain. So it's a blockchain platform like Ethereum. Can you see it? It's a blockchain platform. The first to be founded on peer review research and blah blah blah. You just read it, you know what they do. Can you see? It's a blockchain protocol. So it's possible. That's what it does. This is what it does. So when you read it, you will see exactly, you will be able to know more about what they actually do. So that is that. Somebody asked to my DM one yesterday that how can you read about a coin? That's the answer to it. You just come and search it up on Coin Market Cap. You will see their website there. You will read it, so you will know about the coin. So that's what we mean by that. Let's go to the next one. Now, then you do background analysis. Now you check their team members, because every cryptocurrency project has team behind it. There has to be people that are running it. It cannot be running on its own automatically. There should be people that actually wrote the programs and all of that will be pushing the marketing. So you have to check the team members. Now, when you check these team members, you research about their profiles, their track record, and what they have done in the past. So you'll be able to know that these people are not scammers. Do you understand? If it's a coin that you actually want to be trading, you have to know all these things, because you cannot afford to go and trade a coin that will just be stagnant, that you buy and nobody will be willing to buy you will not see anybody to sell it to. So you don't want to fall for all those kind of coins. Now, if you are trading, if I proceed, if you are trading top coins on Binance, you might not need to do this because Binance would have done this already for those top coins. So you might not need to do this. For example, you want to trade coins like XRP, like BNB, like ETH. You don't need to do all this. Everybody knows the owner of ETH. Everybody knows the owner of XRP. So you don't need to check project team analysis, background analysis for all those top coins. But if you are trading something like Quark, that Quark that we saw the other time, let's say you want to trade Quark, I need to know what Quark is. You come here and check what the Quark is. Look at the market cap. Market cap is sorry, total supply. Circulating supply one, two, three, four, five. Many zero. That's 15 zeros. This much. This is very much. That's one thing. We have already seen that the supply is much. Now I want to see the people that are behind it. We just go to their website. So you just look around for the team. You just look around on the website. I won't be going into it very well because of time. You just calm down, go through the website. When you calm down, you see the team behind the coin. If you can't see it from here, you can go to their there's no more time for me. So you can check their Telegram group. You check their Telegram, you see people that are there. From there, you can even see the team behind it. So these are very, very essential for you to do. Maybe later on I will there's a video on my channel that I will recommend to you that will help you out to do this better. Um, so that is exactly what this point is saying. Now you check their past experience, accomplishments should be well documented. Then you provide insight into the team you are trusting. You must know what this team are up to. Then you have to know that there's something about roadmap. We'll talk about roadmap later. This roadmap is just their plans, what they want to do, how they plan to execute the project, this roadmap. So you must know them so that you'll be able to know if you can trust them with your money. Because when you are buying a coin, especially from if you are buying any coin, what you are doing is you are investing your money into that coin. You are giving the developer money directly. If it's a new coin, do you understand? So if you buy it, you invested, and it's time for you to sell, there's no one for you to sell to. You have lost your money. That is why you must be very, very careful and check the team involved. So you may also consider an early backers or advisors to the projects in order to assess credibility. This means you may also look into people that are invested into the coins, people that are backing the coins. Like if when I invested in Doge in January. I made a lot of money from Doge, a lot of money. I invested like $500 in Doge in January this year, last year. Ha! I was scared of the money I made from Doge. What made me invest in Doge? There was a time I saw Elon Musk change his Twitter bio to CEO at Doge. I did not even do any other analysis before God and man. I did not do any other analysis. I just went straight and buy it. I just went straight and buy it. E gave me more than 500%. A lot of money I made from Doge. I made a lot of money from Doge. So this another very key aspect. If you see a coin that has been backed by a very top personality, you should just know that this is a good buy. Do you understand? Just imagine Queen Elizabeth of England begin to talk about a particular coin, and you are opportune to get access to that. That's huge for you. Immediately you buy the coin. You don't need to ask plenty questions. So that's exactly what this means. Now, crypto white paper. This is the stressful part because even me, I don't like reading white paper, but this will give you more assurance about the coin you are buying. Uh, I don't really believe in coin paper, white papers anymore because they will just write what they want inside. If they decide to close the website, you cannot hold them because, but at least you should still read it. And if you are reading it, these are the things that you will see: the blockchain technology solutions, the problem, the solution, the solution, the what's it called now? The coin is providing, it will be there. Then use cases for the currency, it will be there. Planned features of and upgrade to be in the white paper. You can also see the white paper on coin market cap. You will see it on coin market cap. Where's coin market cap? Okay, see, can you see it here? This is their white paper. This one does not even have a white paper. This one does not even have a white paper. That's serious. If you see a good coin, let's look for a good coin. You see the white paper. So that's another, that's for me, that's another red flag for this rich quack. Let's look for like Cardano. Okay, I feel Cardano too much. Let's just go to popular coins, BNB. Okay, the white paper is not here directly on the first page. Um, let's look for that one. Okay, this is white paper for Cardano. Can you see? Um, you can read a lot about it here. It used to be very big. Some coin will make it in form of PDF, but I don't know. Maybe this is how this ones has been done. But here you can read most of the things I which coin can I mention now? Can I look for and set as example? I'm really trying to beat time. Time is hugely against us. Hey, this is exactly what I'm expecting to see. This is what it looks like. Can you see this PDF file? So you see everything about the coin inside this PDF. Now these are the things you will look to: the blockchain technology, use case, plan features, and all of that. All of that will be inside that market cap. It used to be very stressful to read. Personally, I don't read it, but if you can read it, it's a very nice thing to do. So you have to do that, and that's another point. So you must take into consideration all of these things. Then the next one is social political environment, user behavior. These are the things that you should do in terms of fundamental analysis. User behavior means fundamental analysis is supposed to give investors a holistic overview. The user behavior is one of the most difficult factors to evaluate. Social media, crypto community, marketing in general can all have major impact on user behavior. That's exactly what I spoke about, like Elon Musk. This is exactly what I'm saying here. Can you see? A few tips from Elon Musk may spawn a field of Dogecoins and meme coins. When Elon Musk, I don't know, Elon Musk does not really do that anymore. But when he started doing these things, if Elon Musk should tweet about a coin, you will see the coin skyrocketing anyhow. So that's exactly what we mean by user behavior. There are a lot of them you should look into, but these are the major ones that you should look into. With time, you will get to learn more about them. So these are the things you put into consideration while doing your fundamental analysis before you buy on spot trade. Before you trade on spot trade, before you know the select the coins you want to trade on spot, you must have gone through all these factors and ensure that everything is to your favor. Is to your favor. Market cap, you must check market cap. If market cap is too small, then you know that this is a coin you cannot invest too much in, because the higher the risk, the higher the reward. But you'll be expecting high reward and also high risk. If the market cap is huge, you'll be expecting less reward but less risk. Then you must ensure that it has liquidity, people are trading it. Then it must have volume, you must see big volume on it. um then you must do background analysis, you must check the crypto white paper if you can. Then you must check the project metric, what does it do, the internal external factors and all of that. Then user behavior, which is social political uh this social political environment, don't know, let's just tie it, maybe I will talk about it later. Yeah, so now after fundamental analysis, the next thing you can talk about is you can look at before trading a coin on spot environment is technical analysis. You can also use, we say that before you buy a coin here, we say before you buy a coin, you must analyze a coin. And there are two ways in analyzing a coin, either through fundamental analysis or technical analysis. Now I said fundamental analysis are just all this, checking all this. Now technical analysis is the next thing you can do. It's another type of analysis you can do. Now, what is technical analysis? Technical analysis describe analyzing historical price and volume trends to predict the future price movement of assets. You use the previous price actions. Somebody is complaining that the link is not loading on group chat. I don't know why he's saying that, but everyone is here and the thing is working well. So maybe it's from him. I don't know why he's saying that. I still have a very strong connection. Wow. I enjoyed this stream today. All right. Now, technical analysis use historical past data. What do I mean by this? For example, if I want to go into if I want to go into agricultural produce business now, I want to be buying farm produce, I want to be buying rice, I want to be buying beans and selling it later. Before I will go to the market and buy it, I must do my analysis. And there are different type of analysis I can do. One of them is checking price actions, like asking those that are there that last year, how much was bag of rice in the beginning of the year, how much was bag of rice in January, February, March. Then I will know all those the times that price changes. Do you understand? The time that is cheap, the time that is low, I know all those things. The time that is expensive, I have to know these prices. Do you understand? Then I can ask that, okay, 2 years ago, how was it? If they are almost similar, 3 years ago, they are also similar. Now I already have the prices written down. So immediately I see bag of rice at this particular price, bam, I'll be able to check those data I've collected and say, kai, this is April. Last year in April, bag of rice was 20K. 2 years ago, bag of rice was 20,500. 3 years ago, bag of rice was 20,200. So I'll be able to know. Then in July, bag of rice is 50K. That means increased by almost twice. So I will know that the best time to buy it is in April. This is technical analysis because I'm using price data. Do you understand it now? It's looking simpler because we are just looking into few months prices. If I'm to be taking the price every minute, every second, every hour, it will be more complex. That is why technical analysis look very complex, because what you are just doing is accessing and using the prices of that asset. For example, Bitcoin. What's the price of Bitcoin? 1 hour ago? What was the price of Bitcoin 10 minutes ago, 5 minutes ago, 2 hours ago, 2 years ago? Do you understand? So these are what you use to know where people are buying. Where is it cheap? Where is it expensive? Do you understand? This one you don't need to know much about the coin. All you are interested in is just the price. When you see the price, when you see the price, the past data, the past history of the prices, you'll be able to do your analysis on it, do some plotting on it, use it to plot the graph. You plot the time against the price against the time. When we get to technical analysis proper, you get to understand. So that's what you do. Technical analysis uses mathematical calculations using past data to predict future prices. So you can use this to know a coin that's currently cheap and with high probability of higher prices in the nearest future. We'll talk more about this topic as we proceed. This is a whole lot of, in fact, we are going to spend up to 2 weeks. We are going to spend up to 14 days talking about technical analysis. In fact, that's the central of this our course, like the central focus of this course. So let's just leave it here for now. We'll get back to it when we go to technical analysis series. All right, now we just spoke about sports trading. Now the next thing we'll be talking about now is future trading. Sorry, let me drink water. So the next type of trading we'll be talking about is future trading. Now, future trading is not like sports where you buy a coin and the coin will be delivered to your wallet. You can send out the coin to someone and somebody can send the coin to you. It is different. In futures, you are not buying any coin at all. If you are trading Cardano, for example, on futures, you are not buying Cardano. There will be no Cardano in your wallet. Do you understand? If you are buying XRP, there will be no XRP delivered to your wallet. If you are trading Dodge, you are buying Dodge, there will be no Dodge delivered to your wallet. You are not owning the coin actually. So if you are not owning the coin, how are you not trading it? Let's look into it. Now, futures or future contracts are an agreement to buy or sell an asset at a later time for a fixed price. They are typically used by traders as a way to hedge other investments or to lock in profit when trading in volatile markets. This means that when trading futures contracts, you cannot you are not buying or owning any assets. You are only betting on the future prices of the underlying assets. That means if you are buying Bitcoin on future contracts, no Bitcoin will be given to you. They will not deliver any Bitcoin to your wallet. You are only betting on the change in price. For example, if you are buying on futures, you are just telling the exchange that, okay, I want to buy Bitcoin at $44,000. Let's say that's where you are buying. Do you get it? Now, immediately you press on buy and the price of Bitcoin start going up, you see your account showing profits. You are betting on the price. You are betting on the price. So as the price is going up, in your profit will be going up because if you have bought on spot and the price begin to go up, automatically your the value of the coin, your money will now start increasing. Now, if it's futures, is the profit that the coin is making now will now be accounted to your wallet. Do you understand? Is the profit now that you'll be seeing in your wallet, not Bitcoin. Now, immediate as it going up and up and up, you'll be seeing the profit of it in your wallet, not the Bitcoin its own. You are not buying any Bitcoin. So anytime you can say, okay, I've made enough profit, I want to stop here. So that place that you are stopping at is where you are selling off what you have bought. So maybe you bought at 44k. Now you see price at 46k. You say, okay, I want to sell off here. The if you bought one Bitcoin, now the profit of one Bitcoin on it will be $2,000 because you bought at 44k and it's now at 46k. You have made $2,000 profit. So that $2,000 is what you will see in your wallet in USDT if you are trading BTC USDT. Do you understand? So you are only betting on the price. Now, if the price now begin to go down, you will now see yourself in loss. It's going against you, see yourself in loss. So if the loss keep increasing and you feel like, okay, I want to stop it here, I don't want to take this loss anymore, that means you are selling it at a lesser price. You lose money because you bought it at 44k. The price now at 42k, you have lost $2,000 on one Bitcoin. No Bitcoin is delivered to you. The loss now will be in USDT. Now, before you can trade this, you must have USDT in your wallet or whatever you are trading with. If it is if it is XXS, I said it somewhere here. If it is XXS slash so if it is BTC slash any coin that says what you are using, that's what you must have in your wallet. Do you understand that? Now, the advantage of future is that since you are not actually buying the coin, you are only betting on the price. You can also, if the price is at $44,000 and you know for sure from your analysis that the price is actually going to drop to $40,000, you can sell. Despite that you don't own the coin, you can sell it. So selling it means you are buying it at that 44k to sell. Sorry, you are selling at that 44k to now buy it back at a lower price. For example, if you have Bitcoin, you have Bitcoin in your wallet. When Bitcoin is 45 40 $40,000, you have one Bitcoin in your wallet, and now you have done your analysis. You know that Bitcoin is going to fall, right? So you can sell off that 40,000 that Bitcoin at $40,000, so that when it drops to like 35, you now buy it back. Automatically, you have saved what, $5,000. You have made the profit of $5,000. So that makes it possible on futures. You can actually sell a coin and buy lower. So we call it short. So if you already know that this coin is going to go down, all you have to do is what? Is to sell. You just click on sell. Now, if you click on sell, what you are just saying is that the price will drop. So if the price begin to drop, you'll be seeing yourself in profit. You see yourself in profit. That means you are buying from me, you want to sell. Sorry, you sold from me, but you are going to buy back lower. So if the price is going down, down, then you'll be seeing yourself in profit. So any point you can say this profit is enough. Now I want to buy it back. What I've sold, I want to buy it back. Do you understand? So that makes it possible for you to make money when Bitcoin is rising and Bitcoin is falling, or any cryptocurrency you want to trade on futures. If the coin, you do your analysis, and from your analysis you feel is going to go up, all you have to do is to click on buy. If you click on buy and the price is going up, you'll be seeing yourself in profits. Do you understand? And anytime your profit is enough, you can say, okay, I'm okay here. Then it's going to cut it and send your profit to your wallet automatically, instantly. And on the other hand, if you say it's going to go up and now begin to go down, that means it's going against you. Are you getting it now? That means it's going against you. And if that is happening, you'll be seeing yourself in loss. You'll be seeing yourself in loss, you'll be seeing yourself in loss, you'll be seeing yourself in loss. And when you see that this loss is enough, I can't take it anymore. Because one thing about future is that once your loss is equals to what you have in your wallet, it's going to close it for you automatically by itself, and your money is gone forever. So immediately you see it going against you, you don't want it to go to zero so that you not lose everything. You can say, okay, stop it here. You can stop it, and your loss will just be minimized. And the amount you lose will be removed from your wallet immediately. Then on the other hand, after your analysis, you saw that the coin is going to go down. You saw that the coin is going to go down. So you can just click on sell from futures. When you click on sell and the coin begin to go down, you'll be seeing yourself in what? In profits. You profit. So anytime you are enough, you are okay with you are satisfied with the profit, you can say it's okay, cut it. I'm okay with this profit. Immediately your profit will be sent to your wallet. But if you say sell, that is going to go down and it's now going up, you are in trouble. You'll be seeing yourself in loss. You'll be seeing yourself in loss. So you have to either cut your loss, or just hope that it's going to go back to your favor. If it doesn't go to your favor and it keep going against you and your money finish, the loss equals amount you're having your futures wallet is going to close it for you and your money is gone forever. But if you decide, maybe you have $100, you are seeing minus $220, you can say stop it here. It's going to remove that $20 from your wallet and you'll be now having $80. So that is exactly what all this storage in this place, all this English in this place, that is what they are saying. So you can decide to close your future trades anytime, either in loss or in futures. You have 100% control over it. The only time you are out of control is when the trade begins to go against you and your loss equals your balance. Then you'll be forced out of the position. This phenomenon is called liquidation. So when you are forced out of your position, then you have been liquidated. It's called what? Liquidation. All right. Now this makes it possible for you to make money regardless of what market is doing. If prices, I've already explained everything in this place. You get liquidated when your loss is equal to your future wallet balance. I've explained it. This makes future more riskier because you can lose all your money. Future is very, very risky. Okay, there's something here that I was explaining that time. I just saw it now. To trade future contracts, you must have coin you want to trade against on your future wallet. And this is what you will be betting on. It can be Bitcoin, it can be USDT, it can be BNB. Now, if you are betting on USDT, that means you must have USDT in your wallet. And the exchanges what you'll be trading will be XXA/USDT. That means whatever coin you want to trade, if it is Cardano, you see ADA's USDT. If it is XRP, you see XRP USDT. If it is Dot, you see Dot USDT. So this XXS is the coin that you're actually trading on, but you will be charged, your profit and loss will be paid in USDT. Do you understand that now? Now, there are some terms. Um, this is what I'm going to do to save our time. I'm supposed to go to my trading platform now. I'm supposed to go to Binance now and show you how you can set your trades on futures. Do you understand? I've already done for sports. How to buy and sell that I did in our first class is actually what it is all about, sports trading. Do you understand? It's all you need to know about sport trading, how to do sport trading. Um, there are some terms also you should know, but you will know them when we get to technical analysis, like how to set stop loss, how to use pending orders, and all of that. When we get to technical analysis, you know more about it because technical analysis is where you will know the price you are buying. You can do your fundamental analysis and be very good at it, but fundamental analysis will not tell you the exact price where you should buy from. Do you understand? You when we get to Don't let me be hard on myself. When we get to all these topics, you get them better. Now there are some features. There are some stuff in future trading that you have to understand. You have to understand so that when we get to technical analysis, it's going to be easier for me because it's after the technical analysis we'll start trading. We'll start trading. Now, number one thing that you should familiarize yourself with is what we call leveraging. Leveraging. Now, what is leveraging? I can't start going reading through this thing, but I'll just explain it. You can read it anytime you want to read it. Now, leverage is just like borrowing. Like when they say you leverage on something, that means you rely on something. Do you understand? So now, this leverage is the okay. Let me just read it out. Leverage is essentially borrowed funds that increase the trader's position size and its market exposure, thus its profitability. Now, the term leverage refers to how much the position was increased by. Yes, if you are trading with $10 and Bitcoin, maybe you are trading Bitcoin with $10 and Bitcoin does movement of 1%. 1% of $10 is just $1. So $1 is too small for you. Now, your exchange can help you amplify that profit by any amount you want. Most exchange offers up to 100x leverage. That means they can increase that your $1 profit to $100 for you. That's leveraging, just amplifying your position size. If you are entering a trade with $1,000 one USDT, for example, now leverage will now amplify it, so that it will now be working as if you are using 1 to 100 leverage. Now that means $1 will be acting as $100. Do you understand? If you are trading with 1 to 50 leverage, that means $1 will be acting as $50. That means like multiply by the amount here. So if you are trading with $50, it will be acting as 50 times 100. That's $5,000. That's what it will be working as. The term leverage refers to how much the position was increased by. For instance, leverage will increase a 500 Bitcoin position to as big and as profitable as 50,000 $50,000 Bitcoin position. Do you see it has improved it largely? Can you see it now? So now, this is the catch about leverage. This is the catch about leverage. If you open a trade and you leverage with $100, your profit will be increased, will be multiplied by $100. Also, your loss. If Bitcoin should do 1% increase, it did 1% increase, and you are leveraging it by 100. You are using 100x leverage. That means that your $100 now is acting as $10,000. So you'll be seeing profit of, on just 1% move, you'll be seeing profit of more, be seeing profit of 100%, because Bitcoin did 1%. Sorry, what's happening? Now the danger about it is that if the 1% move now is negative, 1% move is against you. If the 1% move now is against you, let's say you predict that Bitcoin is going to go up, and you bought Bitcoin, and Bitcoin now drop by 1%. It's only 1% drop, but your account will be showing 100% drop. Do you understand? Your account will be showing 100% drop. That means if you use $1, if you are supposed to be losing $1, you'll be losing $100. If you are supposed to be losing $10, you'll be losing $1,000. That's the danger of leverage. But on the other hand, if it goes your way by 1%, Bitcoin originally moves by 1%, your own trade will be moving by 100%. So that means if you are supposed to be making $1 profit on spots, and you now use leverage, 100x leverage on futures, you'll be making 100%. Now the problem there now is that if you use $100 account, and let's say you use $10 to enter a trade, now Bitcoin does 1% move against you. Bitcoin does 1% move against you. That means the 1% move is going to be supposed to be 10. It's supposed to be 1% of $10 is $1 now. Yes, it's supposed to be $1. But because of leverage you have used, it's now going to multiply it by 100. So your loss is now going to be $100, and your balance is $100. Your loss is now $100. If they will liquidate your account, your $100 is gone for life, just because of 1% move. Can you see how dangerous it is? But the joy is that if Bitcoin should go in your favor by 5%, for example, so that will be 5 times 100. That's 500%. So you have made 500% of what you use. You use $10 to enter the trade. So you have made 500% of $10. That's, you'll be seeing about $5,000 $500 profits. So you'll be seeing $50 profits. That's 500%. You'll be seeing $50 profit. That's the joy. Is my math correct? I'm not sure if my math is correct, but I am sure you understand what I'm saying. If you read through this, you get it better. This simply means that when you have $100 in your wallet, a future wallet account, and you use up to 100x leverage, your loss and profit on every trade is multiplied by 100. If you long BTC USDT and it moves your favor without leverage, you are supposed to make $1, but if you are on 100x leverage, your profit will be $100. Your loss supposed to be $100, but because of leverage, your profit is going to be what? $100. And on the other hand, if the trade is going against you and your loss is supposed to be $0.5 and you are on 100x leverage, your loss will be what? Will be $50 because this will be multiplied by 100. Ah, light is against. Sorry, my ring light went off. My power bank is dead. Wow, this class has been overextended. All right, let me just round up. So that's what leveraging means. Now let's go to the next one. Now the next one is margin. I can't really rush it. We still have a long way to go. All right, this is what I'll just do. I'll just end the class here for today. I'm not actually prepared for 2 hours class, and this 20 minutes past 10 already. So I'll end the class here. By God's grace, tomorrow will be. I will try as much as I can to cover this aspect tomorrow. We'll cover everything tomorrow before going to tomorrow's work. Now, before I end the class, I will give 5 minutes for question and answer. I will give 5 minutes for question and answer. So if you have question, please you can ask. If you have question, please you can ask. I will give just 5 minutes for question and answer. So please, I'm waiting. If you have a question, uh, I think this is the model we should be using from now onward. If you have a question, just type it somewhere, or you can also drop it on the chat so that I will not be waiting for long. There's 2 minutes interval in YouTube live stream. That means what I'm saying now, you guys will be hearing it 2 minutes after. So I don't know. So just drop your question in the chat box. Then after the class, I will get all the questions there and answer them all at once. So nobody is saying anything. Nobody is. I believe there is no question. Let me just wait for more few minutes. Yes, I will drop the link for a rewatch. Definitely. Yes, I will. I'll drop the link for rewatch. Okay, there's a question here by Unique Media. It said if you enter a trade with $1 and leverage 100x and have a loss and your balance isn't up to $100, how would you remove it? Yes, it will immediately your loss is equals to your balance. It's going to close. If you, for example, you have you if you enter a trade with $1 and leverage is $100 and have a loss and your balance is not, if you have just $1 in your wallet and you're able to place the trade, immediately your loss click enters $1, your loss enters -$1. They are going to close the trade. They are going to close the trade for you direct straight. That's why I said when your loss is equals to your balance, they will force you out of the position. The position will be closed and your money is gone forever. So you cannot owe them money. Immediately your loss equals your balance, the trade closes and your money is gone forever. That's futures for you. It's not possible. They can't allow you to have a negative balance. It's not possible. It's not possible. In fact, they will calculate their charges too. So in fact, your loss will not get to $1 before they close it. Once your loss get to like 0.9 something cents dollar, that's why they will close it for you, because they also remove their charges inside. So I think that's all the questions we have for tonight, and um, we'll be stopping here. By the grace of God, let me start it. Where did we stop at? Let me start it. So, by the grace of God, we'll be continuing from here tomorrow. We'll continue from here tomorrow. Yeah, thank you for watching. And okay, there's another question. You say in future trading, is the prediction per hour, day, or till it trade the amount? Yes, it's not per hour. There's different type of future trading. Is perpetual. Now, if you're using perpetual is opened. Your trade will keep running. That's what I trade anyways. Your trade will keep running until you either close it, open it, sorry, until you either close it in loss or profit, or you are being forced out through liquidation. For example, if you open long, currently Bitcoin is at around 43K, ba? Let's say you open long, you click on buy, you are buying Bitcoin, BTC, USDT on futures right now, and it begin to go up, your profits begin to accumulate. If you don't close it, that's how your profit will keep accumulating forever until Bitcoin come against you and now liquidate your wallet. But if it doesn't come back to that 43K and you are in profit, it will keep reading profit for you forever and ever until you close it or the exchange shut down or something bad happens to the blockchain the world. So that is it. It's not time dependent. It's balance and price dependent until you close it. If it doesn't close it, you keep running. Or if your money runs out, you will be liquidated. Olaiya Rasheedat, hope that answered your question. There's another type of future trading that is time dependent, but I don't really do that. I only use perpetual. So if you're using perpetual is opened. You will only be paying fees. There's something called funding fees. We'll talk about it later on. All right. So there's no any other question. Thank you all uh for your time. If you have to clarify anything, you can revisit the live stream. I'm going to upload it. In fact, it's being uploaded automatically. I will just have to edit it, cut out some parts, and it will be ready for rewatch. Thank you everyone, and have a nice night rest. Ha! There's a question here also. It said if you are trading against Bitcoin, so you must have Bitcoin. Yes, if you are trading against Bitcoin, you must have Bitcoin. There are futures. You can actually trade against Bitcoin, your future trading. You can trade XRP/BTC. You can trade you can trade BNB/BTC. If you are trading those pairs, you must have BTC in your wallet. So that will be all. No more question will be accepted. Good night, everyone. Have a wonderful